A look at KB Home. Those shares are falling on the back of its third quarter results, which missed on the bottom line. Joining us now is Jesse Lederman, Associate Director at Zelman Associates. Jesse, you reiterated your underperform on this stock just before earnings, and it seems to be playing out as you expected, down about 5.5%. What did you note in these results?
Hey, thanks for having me. Yeah, EPS was roughly in line with our expectations and consensus. But the shortfall was that the orders were flat from a year ago versus the street expecting up 9%. And this was driven by choppiness in demand during the quarter and just not as much incentivizing as peers. So, positively, commentary suggested that activity improved toward the end of the quarter, which is consistent with our channel checks. But our view is that the stock was sitting at a 10% premium to peers, and we think the shortfall in orders will lead to some modest downside pressure in the stock.
Now, if things seem to improve toward the end, and we did just get this interest rate cut, does that perhaps take the pressure off of the KB if it was already intending to offer fewer incentives, or is the competition just going to keep their pedal to the gas with rates coming down, and do they still risk underperforming?
Yeah, great question, John. We had our summit, our 17th annual housing summit 2 weeks ago. We had over 500 investors, management teams from housing companies across the country. And the key message that we heard was that home builders will continue to drive sales volume, even as inventory rises, even as rates fall modestly. So we think we're going to continue to see rate buydowns be prevalent. Incentives remain elevated. In fact, KB was offering a mortgage incentive on 60% of its orders each of the last few quarters. So it'll be interesting to hear where that number shakes out on their conference call in a bit.
So on a day where we got more home price data, and I realize it's dated by a couple of months here when we're talking about something like Case-Shiller, but we're still seeing home prices tick higher. So now when you factor in rate cuts into the equation, what does that do to home prices and thus for home builders moving forward?
Great question. So, as you mentioned, the good news is rates have pulled back almost 100 basis points from the highs in June. And, a lot of that was in anticipation of the Fed cutting, which of course it did. And while mortgage rates may continue to move gradually lower, we're not expecting a huge decline because a lot of that's already priced in to the bond market. And so as we think about the remainder of the year, we are in a seasonally slower time of year for the housing market. Plus, there's still some hesitation from buyers for two main reasons. You have uncertainty surrounding the election and some policies that may be housing related that could be keeping buyers on the sidelines. And from our channel checks, as well as from Lennar, what we heard on Friday at their earnings call, was that buyers are still hesitant to pull the trigger in some instances. Even with lower rates, they want to wait and see if rates will decline even further before pulling the trigger.
So if KB Home was trading at a premium to peers before this print, do you buy now on the dip, or do you focus on other home builders as an investor?
Right now our valuation and estimates are under review, but one stock that we are excited about is Lennar. We did upgrade the stock yesterday following its earnings release, and we're excited about the spinoff of their owned land. We think that will make them a more efficient home builder, lead to multiple expansion. It remains to be seen. We'd love to hear some of the commentary on KB from their conference call before making our judgment on what we think the next move is for that stock.